Thank you for joining iMeet. When you hear the tone, you will be the 18th person to join the meeting. Now being recorded.
Hey everybody, good afternoon. This is David Blake with Tucci Tech Talk. And today we're going to quickly review last few days' action in the market, take a look at what may be happening this week, and then we're going to just take a look at the different indexes to start out with. And then we're going to do something like we did last week again, and that was last week we talked about where we could get some trades out of energy and I forget what the other sector, and healthcare. Had a couple of nice trades out of that. And those are also doing fairly well this week. Now, what we're going to do is let's look at two other sectors that may surprise you that I think we can get some trades out of and put some money in, especially for some of the older guys. So what we're going to do is look at last week's action. A seesaw week. Here's the Dow Jones. We saw over here out of going sideways in a little tight range. Some of the older guys fell out of bed on Wednesday. That was the worst one-day drop since the 394 point what we're going to do is drop on 9/9/16. It was about 2.1%. Last week's NASDAQ actually seesaw week. Here's the Dow Jones. We saw over here out of it, and it fell 202 points and lost 4.1% on that day. So it wasn't quite as bad as that, but. Sideways in a little tight range. Some of the older guys fell out of bed on Wednesday.
Thank you for joining iMeet. When you hear the tone, you will be the 18th person to join the meeting. Now being recorded.
Hey everybody, good afternoon. This is David Blake with Tucci Tech Talk. And today we're going to quickly review last few days' action in the market, take a look at what may be happening this week, and then we're going to just take a look at the different indexes to start out with. And then we're going to do something like we did last week again, and that was last week we talked about where we could get some trades out of energy and I forget what the other sector, and healthcare. Had a couple of nice trades out of that. And those are also doing fairly well this week. Now, what we're going to do is let's look at two other sectors that may surprise you that I think we can get some trades out of and put some money in, especially for some of the older guys. So what we're going to do is look at last week's action. A seesaw week. Here's the Dow Jones. We saw over here it was going sideways in this little tight range. Fell out of bed on Wednesday. That was the worst one-day drop since the 394 point drop on 9/9/16. It was about 2.1%. The NASDAQ actually had a worse day. It was the worst day since Brexit when it fell 202 points and lost 4.1% on that day. So it wasn't quite as bad as that, but we had some interesting things going on. We had the Dow Jones and the S&P 500 actually gapped down below their 50-day moving average, as you can see over here, kind of almost down to the 100-day moving average, and then we bounced back up and had a couple of days in a row. I think this is the fourth day in a row now that we've been able to work our way higher, and the indicators show that. We came back down to the 50 point where it was going to be a sell on the 30-day stochastic, bounced off that 50, and we came back up. CTI is still positive 7. Which was unchanged. It'll be 7 at the end of this week, and then we'll start to slide down. So I think we probably have a few more weeks so that we can maybe work our way higher. Momentum's basically still it's a 1. That's neutral. Sentiment is still 0. It's a neutral. There are a couple bearish reads in there. The percentage of bullish advisors is still too high, up around 58.7%. and the bearish advisors are still too low at 17.1%. Now, the reason those are contrarian indicators, and the reason they are, if all the advisors are bullish, usually they have all their money committed already. So who's going to buy stocks to work things higher? So in the last couple of days, we've worked our way back above the 50-day moving average, which is a plus. We're back basically where the Dow Jones is looking at 21,000 again. We're at 20,940 today, up about 0.25%, up 45 points, and the S&P 500 is butted up against 2,400 again, which is where it is exactly right now, 2,400 on the nose. So the good side, the good thing of this right now is this. This is despite that sell-off and moving up. And here's the NYSE advanced decline line, and we made a new high yesterday. I think that's most technicians actually kind of look at that as an indicator of a leading indicator, which means that most of the stocks are still under accumulation, and so far that's leading me to think that we can probably get one more breakout to the upside before we kind of go into the summer doldrums and things begin to work lower. My target for the Dow remains 21.5, and it's all it's all going to matter. What matters here is if you keep an eye on the S&P 500. Once we get up to about 24.05, that's right. I think then we'll probably get one more spike. The target on the S&P 500 is up here around 24.40, which would be the second resistance line after we break through this line here. Now here's the S&P 500. Again, you see the gap down on Wednesday. We've had a couple up days in a row now, and we're back up to the 2400 spot where we've run into it 1, 2, 3, 4, 5, 6, 7. So it's forming a resistance up here. However, you're seeing a little bit of improvement in the indicators down here, which again, we came down to the 50, moved up, good accumulation on the AD line. And I think that, like I say, once we get a little spike through this 2404, 2405 area, we can get ourselves a run up here over the next couple of weeks to around 2435, 2440. I would think that's probably a pretty good bet. Okay, here's the NASDAQ. Working its way up this channel. Came down here, hit it up there, ran almost to the top, up again, came all the way down, almost to the channel here, which is right around the 50-day, and now we're working our way back up. The top of this channel represents 62.44, which, if you've been reading the market letters, that's what we have for the last couple of weeks. That's been the target, 62.40. I think we can probably get it over there. We were overbought if you look down here on several indicators, the 14-day RSI, and here also in the 30-day stochastic. So I think that, we worked a little bit of the overbought condition off of the NASDAQ. So we can get through here. I think we're up close to making a new high today. No, we're not either. We're at 61.42. So we've got another 20 points before we can break out to a new high today. The NASDAQ AD line isn't quite as rambunctious as the NYSE. You're still having a lot of more money going into the Apples and the Microsoft and Facebook, the FANG stocks, working its way up there. I'd like to see this thing, if we're going to break out, at least come back up to this area up in here. That would just show that you're having a little bit more, especially on the small caps, showing some more accumulation. The Russell